Hi everyone, hope you're doing well and hopefully spring is here. I recently came across a Yahoo article that I thought was pretty informative and I wanted to share it with you and point out a couple facts. The author Sam Rowe outlines two important lessons we can learn from 2020. In actuality, these are lessons we can learn from years prior to 2020 as well. The first lesson is that things can and do go bad very quickly. Stock market sell-offs happen all the time. It can be a few percentage points or it can be much larger, 10, 20% or even more. This chart here shows you what the author is talking about. 3 out of every 4 years going back my entire lifetime, I turned 40 in July, the S&P 500 has had a positive return. But it was still a roller coaster ride throughout the year to get there. That's what these red numbers are down here. In most years, the S&P 500 declines at least 10% from that year's peak. Many years including a drop of 15% or more. The second lesson is that the market is forward-looking. We invest in stocks, not because of what stocks are going to give us today, rather what stocks are going to give us tomorrow, or 5, 10, 20, 30 years or more from now. We buy stocks today because our plan is that later in life, we can sell those stocks at a much higher price than we bought them at. We buy stocks for capital appreciation. Yes, some stocks give us money during the year in the form of a dividend, but mainly we're buying stocks because we hope to sell them later to another investor at a much higher price. What happens in retirement? We typically don't have income because we're no longer working. So we have our stock holdings from the last 10, 20, 30 years or more available to sell to generate the money we need for us to pay for a comfortable retirement. In the previous section, I mentioned having a plan, and this article mentioned it too. The secret to making better investment moves when markets are in turmoil is to already have a plan. A well thought out and prepared plan is key to investing the right way. That plan is understanding this. Markets move quickly up and down, so trying to pick our spots of when to be in and when to be out is nearly impossible over any significant length of time. So our best approach is to stay invested. Rebalance our portfolio and add some new money when markets go down and good stocks are on sale. Our plan is to continually purchase stocks in thousands of companies across the globe. And we want to continually purchase those stocks year after year after year, until we don't need them or we don't need as much of them anymore. Then that's when we would sell some of them to raise cash for other things. Or we just shift that cash into protective investments like bonds that protect what we've worked hard for and earned over the decades while generating recurring income for us as well. If we don't learn from our mistakes or the mistakes of others, we're doomed to make the same mistakes again. So let's learn from what has happened in the market. 2020 was a great example of the wealth building and wealth eroding power of the stock market. So let's learn so that we are properly prepared for when it happens again. Thanks for watching.